it's yeah,
Yeah,
it's all
I was
good.
bad mouthing VCs on Twitter yesterday. Do you know the best way to talk to VCs
Is
is
the shit talk 'em?
it's the shit talk VCs. You just basically go, all VCs are utter scammers. They're just going to dump on us. They're just pump and dump merchants, blah blah blah, and then they DM you going, "You're wrong," and then I just go, "Man, you're having a laugh, mate," and then
But
you get
it's
talking.
not really wrong though. That's
They know it's true. This is the other thing, and what it is that there's a class of VCs who are unregulated, basically. So I know VCs. I know VCs who run funds. 90% of the job is compliance. So it's a real nightmare for. So I was talking to a chap the other day who had to write a 200-page document to explain a swap from GUSD to DAI. 50k to 50k, and they spent 100 grand
what?
characterizing that transaction for a £50 for a 50k trade to a
I'm so
stable.
confused. I'm so confused. I think I understood what you said, but I'm like, no, you can't have said that because that makes no sense.
It's compliance, man. It's like, explain this transaction. So now you've got to explain what the smart contract does. This is a stable coin. This is a stable coin trade, but that's realized as income as the fund. So you have to explain it. It's a taxable event, right?
Yeah.
So it's all about tax. It's about explaining to whatever nation state you're in the jurisdiction of. Like if you're a fund in the US, for example, or the UK or the EU, you declare every bit of profit you make. But the problem is DeFi is so new and weird that it's the first time anyone's ever done it. So the VCs who are just basically some offshore shell company with they're not paying any tax because they're just Panama or something. They can just YOLO crypto in and out of all sorts of shit. They're just basically like traders like the rest of us, but with bigger stacks. Those are the VCs who that game trends into these whale games where retail just get minced up. And consequently, on the regulated side, everyone takes bigger positions. This is how you end up with VCs owning like 30% of Solana, for example, because they'll only do, $10 million trades plus. They'll want deep discounts on it. And even if they're vested, they basically are just taking that 30% of the network and exiting it on the new buyers. So both games end up banned.
Regulatory capture is
It's not even regulatory capture. It's just like financial capture, you could argue. It's financial centralization. And it's basically like they just control the market. So let's say 30% of Solana is owned by VCs. And there's literally a video of that Jason Calian laughing with that Chamath guy who's got in loads of trouble this week for saying he doesn't care about the Uyghurs. But it's just the cutthroat profit maximalists. So they're joking about like putting $1 million in Solana that's now $1 billion. And they're like, what are you doing with your Solana position? And they're like, yeah, I'm fucking offloading it into the market, of course. So all the new plebs later in the game who are buying Solana at $100 are buying it at 10,000x on the cost basis of the initial players. So yeah, and it's a problem. I mean it when VCs are a central issue in the space, because if they control too much of the networks, these just become pseudo perpetual money games where they've just got access to a money printer. And the way that money printer runs is by new blood buying the assets.
It is like, well, it's just high. We say this a lot. I know we say it a lot, but it's high level Ponzinomics, right? It's exactly what you need for it to work. It has to people downward.
It's high level Ponzinomics is a good way of putting it, but these are new economic primitives, right? We've not had economics like this before. So there's like crypto economics and token economics. What I'm interested in primarily is token economics. And the difference in my mind is this. Crypto economics is the kind of protocol layer war games that happen in these kind of game theoretic environments, like miners in the Bitcoin ecosystem, for example. And so understanding the thermodynamics of crypto mining, the cost of capital of setting up mining farms, understanding the like economics of all that with blockchains is like crypto economics. And then token economics is like the human layer economics, which you want bank.vote is one of. So each of the apps that we're talking about is a new kind of token economics, which is how you distribute tokens as an ecosystem expands to the participants in the game that are productive actors in the game, rather than rent-seeking actors in the game. So you can argue capturing 30% of a token supply and then relentlessly dumping it on the new people as that network develops is a rent-seeking activity. It's like landlords again. They're like land barons is the way to look at them. So if you do a pre-sale, so before you've got a liquid market, and I've been thinking about this fair launch thing an awful lot recently, and maybe a fair launch is that it starts like no one's got any tokens, right? And then you allocate them as the network expands based on who does stuff for the network. And that implies there's totally zero start. There's no website. It's just an idea. It's a collection of people who are going to work together on doing something. But sometimes there's like a pre-game where people have been working on this. Like I've been thinking about these things for like 7 years. And like now I've been talking about this for years. And before the community got involved, there was a huge amount of work and preparation. So there should be a pre-allocation of tokens, perhaps to people who put years into it. So it's not fair if latecomers come in and get all the value upside, and then the people who set it up have got zero. So part of that setup will involve capital. So sometimes founders will put their own money into it, and they should be buying the tokens. They should be getting a share of the token supply that is at some market rate. So now the pre-tokens have a price, and it's what people are willing to pay for them for the pre-game of a project. So this is where bank comes in. There's either people who've paid to be in this game or worked their way into this game before the crowd are involved. So in our case, the founders took 15% of the token supply, which we're vested in over 3 years. We've never sold a single token of them and don't plan to until we've realized the future of this. We get to the end of our roadmap or to a point where the project is sustainable. We sold 20% to VCs. And part of my grump about VCs is the collection that we, and I didn't have access to polychain capital and multi-coin. I do now, but as a completely unknown guy in the space, you get access to a kind of class of VC money that's just, you're not going to get long-term strategic support from them. Let's put it that way. It's mercenary capital, you might call it. And we picked up quite a lot of that, of people, because remember the game was pump and dumps. There was VCs for a while who were getting 10x on their capital before the token is even launched, because they would fractionalize the safts that were around in the pre-game and sell them OTC in the market. So some of you may be involved in this, I don't know, but there's like a pre-market, pre-launch OTC game, and VCs are all up in that. Like I personally know VCs who've made millions of dollars doing this. SAFT is a simple agreement for future tokens. So before there's any tokens, you need a way of collecting money in exchange for tokens when they're minted. So you have a sort of legal agreement that I promise to give you, if you put 100 grand in my box, I promise to give you X amount of tokens back when we launch them. So we did this. We had SAFT, which we sold to VCs who put money. I went from, can you remember this, Naomi? This was insane. Like I went from, we set up a multi-sig, and we advertised the project, and we generated a huge amount of hype at the time. We sold out we said we'll raise $1.4 million, and we sold it out in a day.
We did it in a weekend, put everything together. It was it was kind of mad.
0 to 1.4. I was watching $100 million transactions coming into our treasury wallet, like just one after the other. It was nuts. We could have raised a lot more money actually, but we just thought that's enough for us to build a real runway out of us and realize first phase of our project at the very least. And in fact, we managed that.
You don't want to raise too much in the first round anyway.
Well, this is it. And there's projects that again have happened in the last couple of weeks where they've raised a $100 million valuation. Their tokens immediately dumped 10% of that because it was an incredibly optimistic valuation for an unreleased project. And in fact, the DeFi market, for example, has cooled down a shitload. And so the valuation, so actually the people have come in, have not come on a discount, they've actually paid a premium. So yeah, that's what happens if you raise too much money. We didn't want to do that. Our initial sort of valuation, in our auction, the first tranche was at what everyone had paid prior to that, near enough. So pre-sale people got in 0.07 cents. The rounds went up in stages to like 1. And then, so most on the market, the VCs had a 30% premium on the listing price. We had a price discovery auction, which priced us in at 2 cents. And then we built Bank to vest them into the market and have the tokens drip to them, to the token, to the second. So it streams the money to you over a set period of time. So let's say 6 months, which is what we set them on. As I mentioned the other day, our mistake was that we give them 25% liquidity on day one. And now there's a prisoner's dilemma between, I think we had 14 investors, each with 25% of their stack liquid in the market at that time. They've got 25% liquidity. Now it's who's going to dump first. I call it a dump race, right? Where there's everyone holding capital looking at a pot of money, and the first person to go starts the depreciation of the remaining pot of money. So let's say there's $2 million in a pot. We're all looking at it and you can go and take out some profits immediately. Or we wait for the pot of money to get bigger and then take the money out at a later date. And the pot of money gets bigger if there's more demand for the tokens in the pot. So if more people want it than just you 13, then the pot of money grows as people buy the tokens out of it. So we found a fair price, and one of our 13 with the biggest bag, it was about 2 million tokens at the time because he'd invested about $250,000 into the project, dumped the tokens within 24 hours of the launch, crashing the price with a $2 million liquidity about 45% or something like that. That triggered the other members to dump in as well. So the dump race was triggered by people with liquid tokens looking at a pot of money. So this is if I was to do this again, I would start everyone at linear vesting. So everyone gets the stream of money at exactly the same rate, and no one starts with any tokens from day one. Now it's the retail participants on their own in the market. Like the VCs have been eliminated from the game with a predictable emission. So now as a retail participant, you can look at the tokens that other participants have in the game and judge your own trading decisions based on an open game.
Yeah, that will allow other DAOs potentially to act as VCs.
Yes, with that, DAOs multi-sigs should in theory be able to participate in our auction. So a lot to take on own, but this is the kind of game theory of market design. Every trade is a person. Every person has a possibility, a market impact factor, which is how much capital that they have. Then it's a psychological game based on their perceived future valuation of the project. So if they have a long-term view on the project, such as I've got a 5-year time horizon, I don't give a shit about this launch. I'm not even interested in selling. They're out of the game, right? They're not playing the dump race game. So you can win that game just by picking 13 cool people. There are people who have a long-term view on the project because they're playing the long game. So they're going to wait for the tokens to go up in value because they believe that they will have a rational market demand in the future based on whatever the technology does. What's this DAO doing? And it's going to create some new value, maybe by selling NFTs or issuing new tokens or launching DAOs. And the token itself has captures some of that value. So we're planning to use burn mechanics on a lot of this, where we just, if we raise 1,000 Ether on an NFT raise, let's say 5% of it, that Ether gets transferred to FET and burn. If we do an NFT launch a week, that's the token itself is capturing that value. Now, an investor who understands that might think, shit, if you're launching NFT series a week, and that's how the token captures the value, sure, I'm going to hold that for 5 years. In which case, we can set Bank to have a cliff in 5 years' time. So no one gets any tokens until 5 years, and then they're dripped out over a year at that point. In which case, because of the time value of money, you can offer those people a greater discount than other participants. So it's not like discounts are bad. Discounts reflect the risk that the pre-sale participants are exposing their money to.
So just quickly, Nick, are we talking about Bank today, or are we talking about Mint?
We're talking about Bank now.
Okay.
Oh, hold on a minute. It said bank.vote at the top of the screen at the start of this.
It's definitely Mint now, right?
It's Mint now, but when I started talking, it was...
But that was good, though. I think that was super interesting. I'd be happy to continue talking about it, but do we need to find a different spot for Mint, or are we going to do 50-50?
Let's do 50-50. Because, and what I'm doing is explaining the token economics of Bank, because what's more important at this point is how we explain the story I've just give you to as many people as possible. So we're in the problem of having something that is needed in the market, but because you need an understanding of token economics to get why it's good, it's a difficult sell.
Did you see that meme I put together like a few months ago? And it's Captain Ahab going out to kill Moby Dick.
Yeah.
And it was like VCs with Moby Dick.
Yeah.
You had retail in the whale's mouth.
Memes is what we need. This is a complex concept. That's a little mental model that you can give to people that might trigger a learning event where they go, actually, yeah, I do always get wrecked on launches. That's why. Do you know what I mean? So we need the market to want a fairer launch context. So
I think
in order,
part
of that is blowing the lid off why the previous game is broken.
I'm wondering if you could do like animations, like simple animations that kind of, this is Trader Bob, and he kind of goes off and does his thing, and it
like animated infographics.
Yeah, animated infographics.
Yeah, I was trying to convince someone I know who's really good at it to do them, but they're super busy. We need to find a good animator who can do infographics and understands crypto.
We talked about that, didn't we, Nick? Like I think back in August last year of doing that, and that's definitely something we can put together internally ourselves now. So we should.
Yeah, really? Okay, that would be awesome. I think these infographics really work.
I had in mind that I could write a fairly much more scripted explanation of that I've just give everyone with diagrams. And just basically, I'll do a video expling Bank.
It just has to be like 90 seconds, I say. Yeah, and the animations has to be 90 seconds.
Yeah, but I used to do this by like scribbling on my iPad, right? Like that with animated diagrams.
We'd run it in different ways and see what works. We can test that.
This is it. This is the problem we have to solve. There are more and more people who are getting this. When we started this in September, it's been a long grind to get a really cool group of people who turn up and listen to us figure this out. Remember, it was just basically just us in the groups. It was like weeks and weeks. So there's more people who get it now and know that we're onto something cool and interesting. We need everyone in the community to explain it to people.
I think part of it as well is like, people still think that Ethereum launches, Bitcoin launches are still possible, but it's not now. The market has fundamentally shifted. That's not how tokens launch anymore. But there's still like this, people still think there's still an opportunity to buy the next Bitcoin in that way. So they're willing to take a risk and roll the dice, even if they know they're probably going to get wrecked. on the off chance they might not get wrecked, and they might make it.
Which is a rational. I've seen people throw $1,000 into just any shit coin of the week, knowing that in a bull market, one of them might 100x. It's a rational trading strategy.
It is a rational trading strategy, and that's the thing.
YOLO is the trading strategy. It's just like bash your money everywhere. That's the thing that you should have done. I think there'll be another phase of that. I think we're in this market cool down moment. I just don't see this being a bear market. There's too much happening. Like, even us, right? The stuff that we've got to launch is enough new stuff for this space to digest. That there has to be more in this market, if you know what I mean, because there's just so much innovation coming. We're just one of thousands of projects doing stuff.
It just feels to me, without going too much into like market analysis, it just seems the liquidity just moves into NFTs now, and then when they're ready to come back into sort of crypto tokens, then it'll move again. Doesn't seem like it's left the space. So I'm with you. I think this is just like a potentially a protracted break.
Yeah. Without it's just a cool down. It's just things get silly. It's like, hey, here's a new idea, and then everyone exploits that idea until it gets utterly absurd. Then people start losing money, and then a new trend emerges, and everyone does the same thing again. Oh, this is cool. Then it gets exploited to the point where you bleed everything out of it, and then the next iteration of that mechanic arises, which fixes the previous ones. So there is this cyclical, and this reflects in the market, in the macro market cycles, but it is fundamentally about new utility, new fundamentals that emerge that drive those market cycles, which means the market's getting more rational, which is good. But you can see there's like NFTs are this new primitive that everyone's gone ballistic for. And I think this is one of the sort of, so getting onto Mint, all of the same issues I talked about for bank are relevant to this. So in a launch context of NFTs, if you've got some rich people who can buy up on the Mint 20% of the token supply, they're just like the VCs. One of the things the NFT market has done is disrupt the VC game a little bit, because VCs they don't buy NFTs. They're not going to buy like JPEGs. It's just, that's even too weird for most of the other VCs. Some of the degen ones did get into the NFT flipping game, but there is a bunch of people who try to hoard as much of the supply at Mint so they can be resellers of the NFTs into the market at a later date. So it's the same phenomenon, right? When you've got rich people reselling the assets. And so Vitalik wrote a paper on it. It called "The Problem with Selling NFTs at Under Market Rate." So a bit like the pump and dump game, the game in NFTs to let's build up. So let's say there's a price that people are willing to pay for an NFT series at Mint. And the more people you get after that finite number of tokens, the higher that perceived amount of they would pay for the tokens at Mint goes higher. So that's what you would call the market rate. The average amount that everyone in the crowd is willing to pay for it. Now, if you sell below that significantly, so if people are willing to pay $1,000 and you're selling them $100, you're selling them below market rate. And the reason why you're doing that is to create an over-demand moment, a hype moment where a thing mints out, there's more demand than supply. That demand then carries into the secondary market because everyone just keeps buying. That secondary demand goes into the market, goes higher. Again, it's the pump and dump effect. And the people you want to be in that game is one of these people with 300 NFTs selling them, which you bought at below market rate, selling them above market rates. Easy money. So Mint is designed to solve a number of those problems. One is, the simple way to do it is do a mass mint, but don't let in every amount of people run at the slots. Make sure you don't have people getting 50 each or 150 or 200. So we've gated each slot NFT in the kind of, you can think of the NFT thing as like 10,000 slots, say. Each slot has a number. And you can say only these 40,000 people can mint these 10,000 NFTs. And what you're trying to do is build a whitelist, which is you're sure that you're going to sell out, but not in such a mad rush that everyone pays all their money to the miners. Right? So if you've got 10,000 people running at the Ethereum chain at once, gas goes like exponential because there's finite block space and a load of people trying to run through the door. So what you're trying to do is smooth out the demand but sell out. That's the kind of design of an optimal mint, I think. That's the kind of design goals of mint, is almost like the fair launch thing again, but it's just more like a sensible launch rather than a crazy one.
Makes sense to me. Obviously, I haven't played with Chibiku a fair bit. I suppose the next question for me would be like, how do we modularize that so other people can use the tech?
So here's what we've got. I think we can turn it into an NFT launch pad. Like Yuvi's getting to get a deck together this morning to try and get to Jamie Foxx, who wants to do an NFT. We want to launch NFTs, like a nice, smooth, sensible minting experience for anyone who wants to launch an NFT. So a celebrity, a band, whatever. That's the way I see Mint going. Jamie Foxx wants an NFT. We say, get yourself some JPEGs, build yourself a community, build yourself a whitelist of people who want your NFT, and mint it out. But like basically what you're doing is allocating you're making sure that whales aren't going to buy all your tokens up. And you do that by just selling NFTs to a controlled list of people you've got civil resistance on. Ideally, you don't dox them to do that. Some platforms will go towards sign up, give me your name and address, etc., etc. We're the decentralized. If you're doing KYC, you're not decentralized, because somewhere there's a person holding a list of your names and addresses that they have to protect legally. So there's a legal object somewhere that's holding that personal private information. Anyway, so we don't do KYC. It's an open permissionless system. But what you do is you can collect the whitelists in any way you want. We don't care if you've KYC'd them or whatever, they're real community members. They're people who want you NFTs. They're your customers. Get a list, build a newsletter, collect Ethereum addresses. That's your whitelist. We've got the rarity system. Like we can build structured probabilistic rarity of these things. We can hide the metadata. People can't mint the rarest NFTs. And there you go, NFT launchpad. That's what I see Mint as.
Is this where you would see also auction coming in so that you can discover the price that's going to sell out?
Exactly. So now we've got a mass mint game. It's not brilliant. You're still potentially selling the NFTs below market rate, right? Because it's a flat price. Or you can sell them at a discount for some people who come in early and so on. So you can do like human input pricing with this system. But maybe you don't want to sell 10,000, maybe you want to sell 100 and you want to sell them at the rate the market is willing to pay them at. Right? So you, the seller, the initial seller, finds the value that the market is willing to pay dynamically. So we issue them through a continuous auction where price goes up and down and people buy it. The first person that sees the price that they're happy to pays it. After that, price doubles and decays into the next price that someone's willing to pay. So you sell your 100, the seller, Jamie Foxx, sells his 100 NFTs at the price the market is willing to pay, rather than at a discount, and everyone else in the secondary market then makes that money. So an auction system is built into this as well, where we can sell them one at a time in a continuous auction, or one of one in a standalone auction, where you send an NFT to a contract and instead of buying it, it's a bid. And you do actually buy it temporarily. You are the owner of that NFT until the next bid comes in, and then they're the owner. And we have it's a binary search through the people in the auction to find the person who's willing to pay the highest price for that NFT. So Mint has these, and we need to decide, Naomi, don't we, where that one-of-one auction falls into auction or Mint.
Yeah, it depends on the messaging product, and I think it depends on, I really think that the NFT audience, so if you think about product itself, how it's designed, the user experience, people buying NFTs are much more mainstream. I just feel that auction.vote is a much more DeFi product, and it's built for that space. So potentially Mint needs a different name, or within Mint, there's Mint and there's...
Sorry, Naomi. What is it about Mint that you don't like as a name?
What we discussed yesterday was that when you do a one-of-one auction, it's not a mint, it's an auction. So that Nick was saying that potentially so I think I sent some screenshots of it yesterday. We have 3 different types of minting or auction mechanics for NFTs. The third one being the one-of-one, which is like a big event. You sell off one big piece to the highest bid in this kind of fair, no sniping auction mechanic. But the idea is that is an auction, whether it is a mint or an auction, that terminology is important. But I wouldn't want to drag normies into a DeFi auction space. They won't know how to deal with it. The NFT launchpad that Nick was mentioning needs to be a very user-friendly, normie-friendly space. So the whole brand of it, mint.vote, might be too weird for normie NFT buyers. What do you think?
Maybe.
Why is it vote? If these people are not necessarily going to become part of an ecosystem or anything like that, right?
Basically, I'm seeing Mint is the one that's most explicitly a white label project, and it'll just say mint.vote powered by mint.vote.
So that's why I think the auction, so the one-of-one is part of this white labeled system. If we go and do something for a celebrity,
again, I think the auction, the one-of-one auction, it's the killer thing about it is the auction design. This binary search auction is like a genuinely novel new auction design. It's not, but for NFT, it's a single item auction. Now, like the auction theory is branded like there's like multi-item auctions and single item auctions. So you can go selling like bandwidth where you buy bands of it and stuff like that.
Do we need to just go like IQ15? Like
I think that's gone.
Explicit.
I'm sure I tried to buy that one. But there's no voting in it.
That's what I mean. The vote is actually the issue. I wonder when you do branding, you need to be you can't be too beholden to it. If you're not flexible enough with your brand, you can actually break it. We can absolutely come up with a different product name for this. I don't think it'll be a problem if it isn't .vote, because there really is no voting involved.
It's more like that signals. It connects it to the rest of the ecosystem. So all of these different, like someone will come in and discover Mint, and they'll go, what's .vote? And they'll find us and find out, we do 6 other apps or whatever. So there is like almost an implicit call to action in it to discover the rest of the ecosystem.
But when you're going out to clients to try and sell it to them, it is slightly confusing.
Mint in particular is like, so it'll be on Jamie Foxx's website, right? They're not going to come to our platform to do it. I think it's got to be decentralized to the people minting the NFTs. We'll embed it into their webpage. The infrastructure, the protocol underneath is us. And
it's not a launch pad, it's an SDK.
Yes, maybe that's it.
I seem to remember like we were having, when we had that sort of conversation, I think it was between Christmas and New Year, but we were talking about the broad topic of branding and stuff. And I think the idea came about losing the .vote aspect after all of our dApps. So it's finance.vote, and then these are the names of our dApps. Was that still in contention as a thought, or have we lost that? Because I do sometimes think that the .vote aspect puts people in a particular frame of mind immediately. And like you're saying, sometimes draws people away from what the dApp does. I'm talking about initially when they hear the name of the product, but I didn't know what your thoughts were on that now.
We've basically already done that in our decks, haven't we?
Yeah, absolutely. But I think we still talk about
bank, auction, mint are the apps. And that's actually how I imagined it. If you go to like Google Maps has sheets, auction, mint. It's just a matter of fact statement of what it is. It's almost like an on-brand, right?
Yeah. Because when I think of even like yield.vote, whilst I appreciate you can have a community voting on the parameters of yield and the pulse and all the variables basically we talk about, the vote aspect, I think just the word vote conjures a very particular thing in everyone's head immediately. And I think that sometimes dilutes the power of what the actual...
we can have is just when you go and find it, you'll end up at that website domain. You get redirected through that, right? It's if we want a satellite website which is specific to those apps. So as part of our website, we could have the pages are those different domains, which we play on this kind of, it's a semantic graph. It's these things are all unified by governance, voting. Mm-hmm. So all of these things have tunable parameters. So my initial vision for this we would eventually have a kind of governance minimized DAO called the DMF, which are the Decentralized Monetary Fund, that manages the monetary policy of all of the .vote dApps. So they are all ultimately linked by voting because they're controlled by the FVT community.
It almost reminds me of, you remember how the websites used to be, some websites are like, either it's users who come or it's devs, and then you have a dev portal that just different website pretty much.
Yeah. Like I'm happy for it makes sense in my head in a kind of hyper-rationalist academic sense, but it might not be the right, it's either a really great brand that people haven't got yet and will eventually, or it's a bad one. I don't know. There's no in between.
Like for me, for me, it's like the sort of the journey I imagine is people go to finance.vote, which is, us, and then they see on that page, whether they click on dApps or whatever it is, but they see bank, yield, influence, mint, and it's very indicative of what the dApp is going to do via that one word name. And if they click on bank and want to learn more about it, it will take them to bank.vote, but we never refer to the dApp itself as bank.vote. And I think that's currently what we do, or there's a real mixture of people talking about bank.vote or bank. Certainly, I think users still call it bank.vote. And the other slightly annoying thing about that, obviously, is it's a URL every time someone writes it in a dApp, and it's in an app, and it's really sort of confusing because they're like, hang on, is bank.vote a separate company to finance.vote? You know what I mean? So I feel like
do you know what it does? It aggressively drops the URL into the post. You're now advertising the project with the website.
I do get the advantage to it, but I do think sometimes that can be, I don't know. Yeah,
I don't think it's a good thing because I don't mean to do it. I'll be talking to someone, I'll check out and I'll put bank.vote without thinking about it, and then all of a sudden there's like this hyperlink and an image and whatever.
Yeah,
and sometimes it gets removed because you're not allowed links in the place you're talking, and also sometimes it just again dilutes the message you're trying to get across in the tweet or the thing. It just, like Matt said, sometimes you're just then fighting with an embedded link when really you're trying to talk about a dApp. I just think I think we're all on the same page. What we're saying is, when we're talking about the dApp, the idea should be to refer to it as the first part of that name and not use the .vote.
You still have to with finance.vote though.
Yeah, I agree, and I think that's fine. It sort of I feel like having the sort of umbrella and the sort of company that hosts all of these dApps always referred to as finance.vote. Like, the reason I think that is because the dApps have progressed and evolved over time, but we've always had finance.vote, and I sort of think the recognition we've built up to this point, regardless of how to then bring people to the page with all the dApps on, it's just when you start talking, like sometimes when you do a thread or when you're talking on Discord and you're having to put .vote after every dApp.
Yeah, I agree completely. What do you think, Naomi?
Yeah, I definitely don't think we need the .votes. The no brandedness of it, yeah, I go back and forth on whether I feel that's like a positive thing or not. It's weird, especially being a branding designer by profession. It's the first time I've definitely not decided to brand something. I think Sometimes there's strength to brands. I'm thinking about, you remember we were looking at Meet, the sushi competitor we have? The brand does give a lot of fun to it. It's like people talk about it. So they came up with a parallel to making a ramen bowl or something. And it gives it like a world to exist in. Like brands have worlds. So
Yeah.
we don't have one. So it doesn't have to come from the product names, but we need to build that world into the brand because that's where people get excited. It's like we're talking about something like Imagine DAOs or something to hold on to. It's
Yeah.
hard to grasp when something is so
Here's the thing.
like
What we need to
yeah.
have is an answer to where are you doing your mint? I'm doing it on Mint. And everyone associates Mint with us.
Yeah.
I'm doing it on auction, and everyone knows that it's auction. Like what we've done is
That is, yes, that would be very cool, but it is like ridiculously hard to actually own a word.
it
This is
is.
why people make brands. This is why huge companies still make brands. They don't try and just be the thing. They try to be a version of that.
So we need like almost like a play on words without trying to be too. Google's a play on words, but actually it's a Google flop they're referring to. So they've captured it now, but in the beginning it was actually a play on words. Now it's become a verb.
Yeah, if you that
I
huge,
think
there was a trend actually where people use just words as brands. Lizzle actually worked for something called Fundament, and the same person owned a company called Gravity, and that was pretty cool. But I don't know how they managed to register it. I think both companies are gone now, but there is a trend like this. It's just not guaranteed that you actually make it.
I guess the thing is as well, like when we talk about Excel and Word and Sheets and things like that, like they are still Microsoft Excel, Microsoft Word, and Google Sheets and Google, like they still have the brand name in the product name. It's just they become so household that people drop that initial bit, and maybe even Microsoft now have dropped the Microsoft Word when you install the suite. I don't know, but I think what's tricky is obviously we don't want to. What doesn't work and what doesn't feel pithy is finance.vote bank, finance.vote mint. It feels like if we could have some sort of condensed shorthand that we can put as our product name beforehand, which slightly rolls off the tongue a bit more, and feels a bit more indicative of okay, it's that company's thing. Because I think that the .vote is the bit that just trips people up because it sounds like you're saying a website and then a thing. But the other thing that just occurred to me when you were talking about that is we don't really have any either product name or anywhere in the branding that talks about or says the word DAO, do we? And that's feels like so integral to what we're doing.
Yeah, that's the new messaging is going to be the DAO suite. So by the way,
absolutely.
this is actually another way of talking about it. These are not really disparate products. As if you talk about Microsoft Office, that's what we're talking about. The product is actually the suite that has pieces.
As a shorthand, use the initials. Instead of using finance.vote, you just go FV mint.
We have used FVT as a kind of weird brand, which I haven't started to like, which is like FVT down.
I always dropped it since I joined. I started just like dropping it because I didn't know. I didn't want to like refer to a token. But that was like I usually say this is like kind of my own invention. FV ecosystem. Even though the token is a part of it, but I don't know. It just felt weird. But
tell you what did work. Ohm. Everyone knows what Ohm is. Right?
The
ohmies. Ohm.
Isn't Ohm their token?
Yes.
Yeah, that's what I mean.
That's why we initially wanted a different token name because we didn't want this one because you couldn't say it. Remember?
Yeah, that was another one that the community did us on. Without we did that on a vote.
The community. Damn you.
When anyone says like the finance.vote DAO suite, for example, that doesn't feel cumbersome or wrong or like that. I think if we're talking about like the suite as a whole, a finance.vote DAO suite, it's our DAO, a suite of apps for DAOs. Like that doesn't feel.
Do we just go like we mint DApp, yield DApp, like mint DApp, yield DApp, bank DApp? So we actually just use the word DApp and just like own the two together. That's what they are.
Sound very good.
I still think we don't need that. I still think if you said, "Oh, look, the finance.vote DAO suite, which includes bank, mint, yield, influence," I still think that's fine in my head. If we're talking about as well, not necessarily them being exclusive. We're not saying people are just going to use bank and nothing else. Like we're saying, there's like a base suite of dApps that you can pick and choose whether you use them or not, but you get them all. Like I think it feels a lot cleaner to me to just have a really cool. And the other thing I really love is, and I think needs to have way more sort of like prominence, is the cube, like the cube spinning and all the makeup of the letters of the dApps being part of that 6-block cube is so cool. And that almost feels, I wonder whether there's some, and I appreciate we're quite late into the course of this now, but some sort of integration of the ID art and those cubes, even if your art was in the shape of a cube, and I don't know, whatever it is, but it feels like so integral to it, and it's such a really cool. Every time I think about the letters and stuff and how they fit in that cube, I think it's such a great design choice, and I really think that can be our sort of branding front and center a bit more as well.
Yeah, look, there's an option for us to give our DAO a name. There's something completely new. And yeah, I think finance.vote is the infrastructure, right? The job of infrastructure is to disappear. And I actually think DApps work brilliantly as names. Mint, auction, yield, that is a DAO suite of
It's a bit like protocol labs to IPFS. So there's protocol labs and there's IPFS, and everyone knows IPFS, and like nerd knows. Because to be honest, when I joined and I heard finance.vote from Lewis, I was like, what the fuck is this shit? It sounds, now I think it's the best project like on the fucking planet. But every time I talk to my friends who don't know about it, they're like, ew, finance.vote. It sounds, finance is boring and vote is boring.
Well, the problem with vote is it involves politics, doesn't it? It automatically is like a reference point to politics.
It is like a dirty word for some people. Like, I've realised, like, I'm banging to democracy, but not everyone is. There's some people who would absolutely be well up for an authoritarian regime and thinks democracy is a bad idea.
And it's not, so that's one extreme, but there's also just a load of people in the middle who are just like, I don't have time for politics. I'm not pro, I'm not anti, I'm not any of those things.
Yeah, it's like, who wants to vote? And what's the point in voting?
Right, I think, right.
You know, it's people don't value it. That's why people don't value voting like I do. See that. So the fundamental premise of this is why .vote is at the center of all of it, is because I think the key to unlocking the potential of DAOs all comes down to the voting dynamics. It's democracy. And there's some people who vote every day, and there's some people who vote once a year. But ultimately, the whole thing comes down to a new kind of decentralized digital democracy system. So when people get it and they go, none of this fundamentally works at all without voting, that's obviously what needs to be solved. Then the brand starts to pick up its new legs. It's like, it all makes sense. The whole thing runs on voting. But right now, it's a really awkward and weird thing for people. Like, it annoys me. I don't like the fact that I write our project and it brings up a URL in Twitter. It does my head in.
Yeah, and it's also a really polarizing word, regardless of whether you think it makes a difference or not. You immediately think, if someone says the word vote to me, I immediately think of ballot boxes and gerrymandering, and weirdly, just because I was obsessed for 5 years with the Republican Party and Trump and stuff, but all I think of is the sort of divisive nature of voting, and you immediately get a fatigue in the forefront of your mind when you see that word, and you're then, and what's annoying about it, obviously, is we're nothing to do with that sort of voting at this stage. It's more of a democracy is what we're talking about. But
it's like, it's so weird. All of these things I knew before when we made the decision. We had quite a long conversation about this, didn't we, Naomi, at the time? It's not
so many conversations about this, and there were lots of. It was very contentious. We spoke to Louis, I think, for about 3 hours once about it.
Yeah, absolutely. But I chose it because it was so fucking weird. I was like, this is weird. This is great.
It wasn't just weird. We were worried about it being boring, that people would hear finance and they'd think it was very one type of thing.
But the fact that we've just talked about it for an hour, like it's got this weird depth to it. It's like, the problem is it doesn't quite fit into anyone's brains.
It also doesn't fit into the NFT space, unfortunately. And because
it doesn't, it's like, look, I'm happy for us to let's come up with a DAO name. Let's be something DAO. The thing is,
because it needs to be, I think to Naomi's point, it needs to be able to say it easily. Okay, so we've got sentient as all here, but otherwise it's like Taoist or Dower. Like, it's not like ohms or ohms or link marines. I know they're obvious things, but we need to like create this sticky brand, right?
Yeah.
That goes across.
So that, interestingly, that so the if you start from the community name, ohms, then you get ohm, then somehow you can get to Olympus now, and then you've got an inbuilt brand into that because it comes with. They used a lot of ancient Greek, like mythology vibes.
It does usually start from a world. That's what I was saying with branding. When you're building brand, it doesn't start from. Yeah, so that's why you need to go as far away from words and like semantics as possible to build a brand, because people attach themselves emotionally, not intellectually.
Do you know what? This is exactly the moment I wanted, which is it is an unbrand. That's what's interesting about it, is that it's like an impossible brand. So I did that on purpose because I wanted the community to do it, not me. And this is the moment.
I got an idea. I don't know if you guys can hear me.
Yeah.
Yeah, great. How about something like democracy or something like this, like a mix between DAO and democracy, and then you can call it like the democracy. I can't even pronounce it. Democracy suit. And then you have the rule of DAOs within it, which is a nice mission because we want DAOs to rule the world. So it could be something like that.
I felt like I'd come across DAOcracy before. There is a company called DAO.
Like Bitocracy as well. Like what?
Yeah.
There's definitely duocracy, and it's quite already. I don't know. It has negative connotations as well.
I think it doesn't probably take you away from voting. Sorry. Yeah, exactly. It doesn't necessarily take you as much away from voting and politics as you want it to. I appreciate I might be totally worrying a little bit about adding another name into the mix. Like when you've got all the data names and you've got finance.vote, and then we come up with a name for our DAO.
I think finance.vote.
Oh, okay. I mean, I'm a little against that idea, I think, as in I'd probably put 90% of my voting power towards not doing that. Only because I do still think there is brand recognition there. And I think losing that does actually lose a lot of the work that we put in. I totally think it will.
We've only got like 3,000 holders. So there isn't many of us.
I don't know. I feel like there's a sort of, regardless of whether you're holding it or not, I still think there's a sort of awareness of building of what we are and what we do. And I feel like it's I don't know. It's that.
If we're going to do a big launch, though, if we're going to go big launch end of the Q1, that is a good time to sweep all of that together, right? If we were going to do like a trickle.
It would have to be now. No, it would have to be now if we're doing it, because we're not going to do a big launch with one brand and then change the brand name. Like this is really, because like
the time is now.
Like now is in like next week, because all the collateral, all the messaging, everything will be around it. It is. It's not a brand. It's something else. It's like Nick said, it's an unbrand. But this is why we started the messaging conversation last week, from imagining a world. So like really when you do branding, you have to start there, because if you just try and come up with a cool name, they feel empty. They're just like puns or like smart ass. They need to connect to a whole world. So if it's an unbrand, I don't know, the first thing that comes to my mind is obviously, but is like Alice in Wonderland, because it's on birthday. Everything is twisty turvy, and there's lots of ways you can go. Yeah, we talk about the rabbit hole a lot. We have a lot of that. Yeah,
Yeah, sorry. No, I was just thinking the other thing that seems to be quite covertly across a lot of things we do is like the idea of a square. Like I'm just thinking of like, quadratic voting being squared, and obviously the square logo. And I'm not saying mint.square because that sounds like we're going really square. But also, like I was thinking of like block and cube and square and all those sort of things, like mint.block. I suppose that then has connotations of blocking you from doing something. But either way, like that is something that's integral to
if you go
what we've got.
I can tell you like bit more about the potential inspiration from like where my head's been at with it. For me, it's a kind of like techno futurist play, right? We believe there's a better future, one that's more decentralized with less middlemen, rent-seeking middlemen in the way, leeching money off us. There's a place where people can build their own collaborative spaces and capture all the value themselves without anyone any other third party coming in and getting in the mix. It's got there's a futurism dimension to it, which we should. Not everyone might have seen that video that we did, Chris.
Yeah.
Post it.
What, our teaser video?
Yeah.
I
love that vibe. Like,
Yeah,
it's got,
we need to add a few more apps to it now.
it's
we-
like,
Yes, of course, we've built more apps.
Taking into point what Naomi was saying about thinking about the world as a high level, that's where we start, and then we can drill down different angles in that. Do we need to go back out to that level a bit? Because it feels like we've gone straight back into this whole let's find the thing immediately, the name. But if we go back out.
Here's the other thing. So we've got 20 minutes before the Twitter spaces. I think we should just continue that conversation there. We've developed a new piece of technology based on this conversation last week. Actually, Naomi, do you want to explain the thing we've just thrown together?
Oh, yeah. So you mean the submissions?
Yeah. Because I'm thinking, it's not like why I'm thinking about it. Because we can get everyone to submit ideas.
Oh, okay. I'm with you now.
This is the conversation we should have using that tech.
Yeah, you remember last week we were talking about, after that messaging, people were saying we'd like to submit, but we want to have a way to get credit or have our names attached to it or associated with us. So I got like super excited by that and had a chat with UV. Like, it's this lovely little piece that I think is so important to DAOs. So Matt knows about it. We're talking. So basically, we've already built it. Hopefully, we'll have a version tomorrow. You'll be able to come in, submit anything to a task. So there'll be some sort of brief. So like the example we had was write an essay about a day in the life of a DAO leader in 2030. You'll be able to submit your whatever kind of content. Actually, we're going to start with text, but we will be able to upload images, video links, potentially any type of file, and you'll be able to submit it and sign a message that'll be eternally connected to your ID. So one that allows it to collect submissions in one place where we can export them and then see them. People will be able to be given credit for the work they've done. And then the next pieces to this, which are really exciting, are the submissions can then be up and down voted. So like you would have in Reddit, +1, -1. And the top 10 submissions will then be immediately, like automated, sent to a vote, to a quadratic vote, where everyone votes on them. And then there can be some action that's also automated on the winner or the top winners. For example, they could be pushed to a decentralized blog space that belongs to the team. So it's actually a completely decentralized DAO content creation system attached to your ID.
That's really cool.
Super excited about it.
You're thinking get everyone, so set competition is the wrong word, but create, maybe it is competition, but we get everyone to put forward their ideas.
It really doesn't have to be a competition. I think every time you set up a kind of submission box, decide on the names, and we can decide whether, like with the tasks, what kind of thing it is. Is it a competition or is it just a collective thought experiment? Is it just a brainstorming session where we can, but we find a way to actually collect the information and store it and then work on it together? So there's another element which will come, I won't get into now, but this will become collaborative as well. For now, it's more like people can submit, but there will be the ability in the app to discuss. So yeah, if you wanted to do a competition, the Imagine DAOs competition, for example, could have done that in this.
Yeah, so instead of the Airtable piece, it's all in app now.
I think this is potentially going to be ready tomorrow, so we'll be able to start using it and testing it out this week.
We've got 15 minutes. What do we think should be the first? We want them to be competitions as well. So
I think some are competitions and some are collaborative.
Yeah, I think
like there isn't always a winner.
We can
sometimes
come up with, we could. Yeah, there's not necessarily like this. So let's say come up with a DAO name and say why, or anything pertinent to what we've just talked about. What's our world? What are the prompt questions that we want to give this week? And we'll set the vote. We'll set it to go live on Friday.
Yeah, Matt and I have been working on that. Started building this out.
Yeah.
Okay. So we'll just add, I think, the new tasks from today, and then we'll have them all in one place. And maybe tomorrow, and we can do it async in one of the channels.
Oh,
Let's
sorry.
just share the content there.
I'm with you, Naomi. Sorry. Yes, so I am. I'm speaking. I've got like a call with them at 7 p.m. tonight to go through setting us up on that. So I'm talking about two separate things, and I think you're talking about something else. D-work?
We're just talking now about the
Competitions.
tasks.
Yes, sorry.
Whatever you
Okay.
want to call them. Yes, sorry.
Yes, sorry.
So remember I
sorry.
sent you the deck with the tasks that we had. Okay, so let's just add a few tasks that we've discussed now today, which I think, what Nick, those two I think are great. What is the kind of world that you imagine for the FET brand? So like, for example, Alice in Wonderland, and why? And come up with a name. We can either have those as one task or we can separate them.
I feel like I was just going to add on that. I feel like making something like that a competition or a competitive is probably not conducive to the sort of creativity of it. I sort of think when it's something as big as that, it feels like the best way to get to these solutions actually is doing what we're doing now for the last hour. And I feel like making it I'm not just saying for an hour, for keep doing these, but because I sort of think making it a competition can sometimes make the whole thing a bit combative when it doesn't need to be, and you get a lot more people getting a bit too emotionally vested in their suggestions, where if you keep it on an even keel and everyone can just talk freely, and it feels like that usually leads to a better solution. That's just in my experience. I'm not saying let's not do a competition. It's my 2 cents.
I think it should be collaborative and
let's tell you what, in the general, come up with some, let's just work it out async. We'll set up some tasks for everyone to get involved with on Friday.
Yeah, we'll be sending a link to actual tasks in this new system.
Yeah, well, it's a test for that as well, isn't it?
Yes, we're going to be, to be honest, it's a very simple kind of adaptation of a lot of the tools we're already using, so people should be very familiar with it as well. And it is just so, like, this is an MVP version. It's not, it'll have a newer kind of flow to it once we build
Guys, I'm going to have 10 minutes break before we go into Twitter Spaces.
Perfect.
Nice one.
Hey,
all
actually,
right.
Nick, just super quick, Nick.
Mm-hmm.
Can you, tomorrow, 7 p.m., the founder of Sketchy wanted to have a chat about DAOs?
Isn't that who we're talking to later?
He's going to be there, but he's basically, I think he can't really talk at that time, but he can listen in. But he wants to talk about how we'd go about setting it up for him.
Right. No, I'm at a Socratic seminar tomorrow.
Nice.
Bitcoin devs. It's like some of the Bitcoin core community are in London.
Okay, so cool. So that's all afternoon, evening. So the day after is better, or
Friday might be possible.
Friday, same time-ish?
I don't know. Let's figure it out at a later date.
Okay.
All right. I'm going to drop.